Hey everyone, welcome to another video by Optionables. My name is Saket, and today in this video we are going to look at the weekly summary of the market, what we can expect from the markets next week, and also certain trade ideas. I'm also going to share certain stories related to the European economy, and we are also going to discuss which was the hardest and the easiest day to trade in the previous week. Without further ado, let's quickly get on to the video, and meanwhile, if you're liking the content, do not forget to hit the like button, share this video, and also subscribe to Optionable. Before moving on, I would like to introduce you to Target by Optionables. Target is an automation platform which lets you create your strategy and automate it absolutely for free. All you require to use Target is a trading account with Firstock. You can use the link in the description to open your account and get first 100 orders free. Without further ado, let's take a quick look on how you can create your strategy and automate it under a minute absolutely for free using Target. You can start using Target by visiting target.optionables.in and registering yourself. Once you're done registering, you can quickly log in to your account. Once you're done validating your OTP, now you can continue either as a guest or with your Firstock account. If you continue as a guest, you'll be able to create your strategies and save it, but you won't be able to execute it. Let's continue with Firstock. After logging in, this would be the home screen of Target. You can simply start creating your first strategy by clicking on Create New. Let us name this strategy 1 p.m. Bank Nifty Short Straddle. We will end up creating a simple short straddle by selling a call leg and selling a put leg with 30% stop loss. We'll also select the option of moving the stop loss to cost, and I'll select my entry time as 1 p.m. and the exit time to be 3:20 p.m. So I want this strategy to execute on all the days. So now I'm just going to click on Save, and my first strategy here will be added. All I have to do now is simply log in the morning and click on Run Algo to automate the entire execution. So not just this, you can end up creating multiple strategies and automate all of them with a single click. Do not forget to check out Target by simply logging in to target.optionables.in, and you will be able to automate the execution of all your strategies absolutely for free. Target initially was access upon request only. That means if you sent a mail requesting the access for Target, we would be providing you the link. So now we'll be opening up for the next 200 registrations only, and gradually we'll be increasing it to 300, 500, and finally keeping the app open. This is the process what we are following while we move from beta version to the stable version. Since registrations are open for the next 200 only, do not forget to check it out and quickly register. So now when we come to the markets last week, so the thing is, we got to see both Nifty and Bank Nifty ended positive. So Nifty ended around 1.5% positive and Bank Nifty ended around 2.5% positive. So banking is clearly outperforming the broader index. So not just that, in the last week, we again got to see FIIs buying close to around 4,000 crores, whereas DIIs sold close to around 1,500 crores. Again, the sentiment for India is very positive. When all the global cues are coming down, India is actually sustaining. When all the global cues start to recover, India is further heading upside. So when you actually look at it, you won't be surprised if Nifty ends up crossing 18,000 by this month end. And by maybe end of December, we can also end up hitting a new all-time high. So now when you actually look at the top gainers last week, so we saw the previous to previous week, IT was the top losing sector. Most of the IT stocks, maybe TCS, Wipro, Infosys, everything had fallen close to around 4 to 5%. But this week, IT ended up recovering. Infosys, Tech Mahindra each ended up gaining close to around 4 to 6%, and they made it to the top gainers for the week list. Along with that, we also had Shree Cements, which ended up gaining close to around 16%, which was the top gainer for this particular week in Nifty. And the funny thing is, when the news came that Shree Cements will be replaced by Adani Enterprises, that is the day when Shree Cements started to outperform, and it went up 16% this particular week alone. So overall, when you look at the markets, it is very positive. So when you look at the banking sector, it is looking very bullish. ICICI Bank has given a new all-time high breakout. Axis and SBI are on the verge of new all-time high breakout. So Bank Nifty is very positive and we can definitely expect some upside in Bank Nifty. So if you remember in the last video, that is what we posted last week, we had suggested to go long on ICICI if it is crossing 890, and we had also suggested a bull call spread in case Bank Nifty is crossing 39,800. So both the trades right now are going quite good. Before moving on to what actually happened to our trade last week, we'll discuss little about the European economy. So recently, European Central Bank increased the rates by 0.75% or 75 basis points. So this might not come as a big increase when you actually look at it in terms of India or US, because in US also we have seen couple of 75 basis point increase, but for Europe it's a big deal because from 1999 there has never been a 75 basis point increase for Europe. After 22 years, it is the first time where the central bank has increased the interest rates by 0.75%. There in Europe, generally the interest rates are very low, and this kind of increase is generally unheard of. The question would be, why exactly did the European central banks increase the rates by 75 basis point? When you actually look at the European economy, the growth is very slow. So hardly European economies are growing at the rate of 2 to 3%. So some are even growing at less than 1%. So some economies are growing at 1 to 2 and 2 to 3. So hardly there might be handful, not even handful of economies which are actually crossing 4 or 5% in growth rate. But on the other hand, the inflation in these economies are really high. So the inflation is somewhere around 8 to 9% in the European economies. And the main reason for this is the gas prices. So because of this Russian conflict, so Russia has stopped the supply of gas to major European countries, because of which the gas prices have shot up almost around 10 times. And this is causing a huge dent on the economies of Europe. So on one hand, you have inflation, which is around 8-9%. On the other hand, you have growth rate, which is just around 1-2%. So this is a classic case of stagflation. So stagflation is when there is no growth but very high inflation, and stagflation is considered to be the worst for the economy because it is going to destroy the economy completely. So it is very hard to come out of stagflation, and most likely you are going to waste decades together to come out of stagflation. So when you actually look at it, in the period of late 1960 to 1970, even US had experienced stagflation, and it almost took a decade for US to completely recover from stagflation and start growing again. So what is the problem of stagflation? The major issue with stagflation is the central banks will be put in a dilemma. So the thing is, whenever the interest rates are low, that time it will promote growth. So let's say the money becomes cheaper, people will start borrowing more, businesses will start borrowing more. So they will start, either businesses will start investing this money into their business, and people will start using this cheap money to purchase goods and services. So this will stimulate the economy and it will start pushing for the economic growth. But the thing is, when the economy is growing, it will also lead to inflation. Because there is so much of cheap money, obviously the demand will be higher and the prices of goods will also end up going higher. So now what will happen is the growth rate is so low and the inflation is so high. If the government increases the interest rates to control the inflation, then there is no growth at all and it is going to hurt the economy very badly. On the other hand, if the central bank actually tries to decrease the interest rates to push growth, then inflation is already high, it is going to increase the inflation even further. So coming out of stagflation is very hard and they have to strike the right balance. So now European economy or European Central Bank is ready to give up growth for some years to control the inflation. So now they're going to increase the interest rates, and they have also committed to increase the interest rates in the further quarters as well. So first they want to bring the inflation under control and later start pushing for growth. While they try to do this, most of the years, maybe almost around 7 to 10 years, is going to get wasted where the economy does not end up growing at all. Because first you want to bring the inflation under control. While doing this, you are hurting the growth of the economy, and then you will start simulating the growth of the economy, which is going to take some time where the economy start to bounce back. So because of this, any investments in Europe also won't be attractive because none of the economies in Europe are really doing well. So even the FIIs or the foreign institutions, especially in US, would prefer investing in Asia compared to Europe because of the current economic situation. When you look at the Asian economies also, apart from India and China, there is no other large economy that is doing really well. So you can say Indonesia and Singapore are doing fairly well, but when you look at our neighbors, for example, Sri Lanka, Pakistan, Bangladesh, all of them are going through economic crisis. That means the most preferred option for all the foreign institutions will definitely be India. As this foreign fund starts to flow into the country, the stock market is going to boom. So that's the reason I tell it won't be a surprise even if we end up crossing the all-time high before December. So with that, now we'll be moving on into the part where we are going to discuss about our trades. So we are going to discuss what happened last week, which was the easiest day to trade and which was the hardest day to trade. So the thing is, last week we ended up overall gaining around 10 lakh. So only on Monday we ended up losing, but Tuesday, Wednesday, Thursday and Friday were fairly good days where we ended up making around 2 to 4 lakh each. After almost around 30 to 40 lakh loss what we had last week, we have made a good bounce back where we have recovered around 10 lakh. So the thing is, even though we had a loss of close to around 30-35 lakh last month or in the last 2 weeks, so it is unlike the situation where we have made a big loss previously. So when we made a big loss previously, what used to happen is it used to hit our psychology very badly because we had lost from options. But this time the loss is different. So it is not really that we have lost from options. It is because we lost around 25 lakh due to a glitch, and also we ended up losing around 10 lakh because of futures. When you look at options, we are doing fairly well in options, and when you only look at the option performance, you can say we are at the highest for this particular quarter. So in spite of the loss, we are quite confident and we haven't taken any hit on our psychology because these two events were not part of our general course of trading. So now we'll be discussing about the easiest day what we had last week and the hardest day what we had last week. Now we'll be moving on to the screen recording where I'm going to show you the charts and tell you why exactly the following day was the easiest and why exactly the following day was the hardest. First, we'll be starting off with the easy day to trade. This week we found both Wednesday and Thursday to be very easy to trade. So here are the following reasons why we exactly felt Wednesday and Thursday was easy. So starting off with Wednesday, so we opened with a gap down of almost around 200 to 300 points. After the opening, the market more or less consolidated around 39,400, 39,500 entire day. So you can see that we opened around 39,400 itself. From there on till the end, we ended up trading around 39,400 itself. As we gapped down, there was increase in IV. That's the reason we also got very good premiums. After that, we simply had a 40,000 call short and a 39,000 put short. So we had a short strangle at 39,000 to 40,000. So whole day the market more or less consolidated in a very small range, hardly around 200 point range, and we got brilliant decay towards the end, and that's the reason this was a very easy day. So there was no need to do any kind of adjustment. It was just a full day of good consolidation. So next, coming to the second easiest day, and that was obviously Thursday. So I would say both of them were almost equally easy to trade. So the second day was obviously the expiry day, which was Thursday. So why exactly it was easy? Because it was a one-sided move. Market opened around 39,750, and after opening around 39,750, the market went higher. Faced some initial resistance around 40,000, came down, but ended up respecting this support. So if you actually go back and check, market had failed to cross this level couple of times even after many attempts. So finally the market took support and started heading higher. By this time it was already clear that the market was going to expire above 39,800, and from there on it was just one way move where the market closed almost at the highest point around 40,250. So, given that the market had broken its crucial resistance, which it was testing from many weeks, finally it broke that and it took support, bounced back. And when you actually looked at the OI data back then, it was obviously quite clear that market was going to expire above 39,800. So, towards the end, we only had put short at 39,800, then 39,900, then towards 40,000, and all of them gave very nice decay, and we ended up making quite good profit. We would consider both Wednesday and Thursday to be equally easy when it comes to the easy trading days last week. So coming to the hardest trading day, it was Tuesday. So market opened around 40,000 and it had crossed well above 40,000. And after that, it came towards 39,500, took support, bounced back again towards 40,000, again fell 400 points to come towards 39,600. So the thing is, even though we ended with a profit on this particular day, because one, we were pretty far, and secondly, as it approached 40,000 and the market started coming down, we started shorting some additional call option. So we were able to book this in the right time, and as the market bounced back, we also shorted some additional put option. But the thing is, finally, towards the end in this particular fall, the put option started to bleed. So we weren't able to cut this at the right point. The put option started to bleed. So overall, we ended the day with around 2.5 lakh profit. But still, I would consider this to be a pretty hard day psychologically. So forget about M2M. When the market is swinging so violently, almost around 300, 400 points up down, within a span of a single day, almost around 3 to 4 times. So it becomes very hard for you to concentrate and take a good decision psychologically. At this time, you really didn't know whether the market is going to consolidate, further head down, or bounce back from here. So it will be very hard to make a decision at that particular point. So that's the reason I would give Tuesday to be the hardest trading day this particular week, even though we ended with a profit and Monday we ended with a loss. So definitely Tuesday was the hardest trading day. So as we just discussed about the easiest and the hardest day, now we are also going to discuss what is the market outlook for next week. So what do we expect from the markets, and also I'm going to suggest some trade ideas. One more thing what I want to mention is whatever we are suggesting is only for educational purpose, and these are our personal views, and I would recommend you to consult your financial advisor before acting on these views. And now we'll quickly move on to the screen recording to do some chart analysis, open interest analysis, and also look at some trade ideas. So now let us discuss the market outlook and trade idea for next week by using the chart and the OI data. So right over here, I have opened 1 hour chart of Nifty, and as we can see, it is quite clear that the market is consolidating in the range of 18,000 to 17,500. So this is a 500 point broad range between which the market is consolidating. And when we look at this, 18,000 is definitely a very good resistance for the market. So looking at the current global cues where the US markets and the European markets are recovering, so IT stocks have started to gain some steam. Banking stocks are at an all-time high and doing extremely well. I would personally expect the markets to break 18,000 sometime soon. So it might be this week or even next week, but in my personal opinion, market should be breaking 18,000 sometime very soon, hopefully by this weekend itself. So we are particularly very bullish on the market based on the global cues and the domestic cues. And when we also look at the open interest for Nifty, we do see that there is some heavy call writing at 17,900 and 18,000. In case if the market ends up going higher, maybe towards 17,900 or 18,000, then the moment these call writers start to cover their position, the market is going to get fueled. So definitely we can expect a rally towards 18,100 or 200 the moment we end up crossing 18,000. So 18,000, you can see there is huge amount of call option. So as we move towards 18,000, slowly there will be put writers who will start shorting some 18,000 puts, and the moment we cross 18,000, all these call writers will start unwinding. But will the market cross 18,000 this week? We don't know. So I would say, even though I'm slightly bullish on the market, 18,000 will definitely act as a very strong resistance for the market. So you can see that quite clearly from the OI data and also from the chart data. So market is going to face some severe resistance around 18,000. And on the lower end, we definitely have 17,500, which is going to act as a very strong support for the market. And even when we look at the OI data, so we do see some strong put writing at 17,700, 600 and 500, and hence 17,500 is definitely going to act as a very good support for the market. So this is with respect to Nifty. And now when we come to Bank Nifty, so Bank Nifty has just broken its swing high and right now trading around 40,300. So, because Bank Nifty had consolidated in the range of 38,000 to 39,800 for almost over 40 to 50 days. So, there was a huge consolidation between 38,000 to 39,800. So, I would particularly expect market to find very good support around 39,800, and on the higher end we have a lot of resistance around 41,500 and 42,000, but definitely on the lower end at least we will find very good support around 39,800. So we do see some strong call writing on the higher end, some strong put writing on the lower end, also some very strong call writing at 4500. So the thing is, why we are seeing so much of call writing is because yesterday market was not able to cross 4500 and immediately it came down, and that's the reason whoever might have shorted 4500 puts or maybe 40,000 puts would have shorted some 4500 calls. So, given the scenario of Bank Nifty, and especially I'm particularly bullish on Bank Nifty, so I would prefer doing a bullish short strangle in Bank Nifty. So, this would be the trade idea for this upcoming week. That's the reason I would request you to consult your financial advisor before taking any trade in the market. So, let me just share the short strangle idea with you. So, given the fact that we are bullish on the market, we expect good support at 39,800, and also maybe at the higher end we might face some resistance. So I would be creating a bullish short strangle where I would short a 40,000 put option. So the moment I short a 40,000 put option, you see that my break even is well below 39,800, something that would make me very comfortable. Along with that, I would short a 41,500 call option. So that will give me a big range on the higher end, almost around 3.5% higher, or maybe to put it in terms of points, almost around 1,500 points higher. By doing that, my break even on the downside would also further increase to 39,700 and 41,800. So this would be one trade idea I would be considering. So this is slightly bullish, and you can see as we start moving towards 4,500 or even 41,000, that would be the point of max profit, and we would be in a comfortable position if we are right around here. And coming down, since I'm expecting some good support at 40,000 and 39,800, so we have a break even of 39,700, which is well below support zone for Bank Nifty. So the idea of adjustment also remains fairly simple. The moment we are either coming towards 39,800 or maybe towards 41,500, we simply convert this position into a short straddle. So let's say we are coming towards 4,500 or on this side 39,800. We simply convert the entire position into a short straddle by either shorting a 40,000 call option or 41,500 put option. So that would be a very simple idea. And beyond that, let's say the market starts moving beyond the break even of a short straddle, then we can simply exit all our position. We'll not end up doing more than one adjustment because I particularly feel it's definitely not worth doing that because it will be complicating the same position over and over again. So we can rather exit it and enter into a simpler position. So that is the trade idea for the week. So to summarize the overall market outlook, in Nifty, we are expecting a consolidation between 17,500 to 18,000. And if the market breaks 18,000, then we can expect some further upside with 18,000 being a very strong support for the market. And coming to Bank Nifty, we have already broken the swing high. So 39,800 is going to act as a very strong support. And if the same momentum continues, we can easily expect market moving towards 41,000 or even 41,500. And coming to the trade idea, since we are bullish on the market and Bank Nifty is showing a relative strength compared to Nifty, we would do a bullish short strangle where we end up shorting a 40,000 put option and 41,500 call option. So the adjustment ideas are fairly simple. The moment we either come towards 39,800 or 41,500, we just convert this position into a simple short straddle, and any further move from there, let's say we end up crossing the break even after adjusting, then we are simply going to exit the entire trade with a small loss. So this is the summary of the market outlook and the trade idea. So with this, we also come to the end of this video. In this video, we have discussed about the market summary for last week and also what happened to our trade, little about the European economy and also some trade ideas for next week. So I hope that you guys have found this video informative, and also do not forget to check out Target by Optionables by just logging into target.optionables.in. So with this, we also come to the end of this video. If you have liked the content, do hit the like button, share this video and subscribe to Optionables. Thank you so much for joining.